Now, technology is playing an increasing role in the way financial services are delivered across the globe. So how will Africa's banks measure up in the near future? Ricardo Dias Marques, Managing Director of West Africa's Diebold Nixdorf, joined me to discuss this. So we're looking at the future of banking. So many exciting things are happening right now. We're seeing so much innovation that's driving, especially in the digital space. We're looking at the physical versus the unseen, as it were. But help us understand what the trends are right now in terms of where we are right now in the banking, and how the future of banking is going to look like as we progress.
Okay, absolutely. If we think about banking, it's pretty much different from place to place. If we speak globally, the trends are definitely going towards personalization. Today we have, let's say, three sets of customers still banking. The baby boomers, banking more traditionally, the millennials, and what they call the Generation X. All of these people are transacting at the same time, at a different pace, with different needs. Definitely the need is going towards a seamless experience, an omnichannel experience where the customer can transact, can operate in multiple channels of the bank at the same time. Is definitely going towards personalization, where you want to have your own experience as a customer. Clients today of the banks, they don't want to bank more traditionally. If you talk to somebody from the baby boomer generation, let's put it like somebody that is close to retirement today, he will still go to the bank. He will still transact. Exactly. If you look at what people are looking today, they don't even want to go to the bank anymore. If you talk about with the younger generation that is now becoming the new customers of the bank. So definitely this is going through a process of going from a traditional physical world to a more digital world. And this is being boosted by the technology that is being evolving and maturing at different paces, of course, in different parts of the world. But the general trend is going to be towards the digital, towards the world, personalized 24/7. I mean, no boundaries in regards to where, how you can initiate and finish.
Okay, so key for especially the Generation X or the millennials, as they call them, key for them will be, I want to do banking regardless of wherever I am. I want to be able to send money, receive money, or do any kind of transaction regardless, or especially not even going to the bank in the first place, but also being able to do this transaction wherever I am.
Anytime, anywhere. This will be more or less the trend. Anytime, anywhere, we can do all sets of transactions. Of course, banking is pretty much, it's not that simple if we talk about traditional banking. Of course, there are some traditional things that tend to stay, and which is the human contact related to advisement, for example. You continuously need advisement from your bank, especially if you are transacting in terms of investments, in terms of
where you need a proper
a more complex product. So another trend is that what you used to have, and the banks can capitalize on this as a traditional teller, this employee inside the bank will probably become a seller, meaning you will capitalize on the human capital that exists today. Okay. The banks will capitalize, of course, on this capital in order to boost the advisement and the following up of more complex products. But the more basic operations that you can do today, this tends, of course, to be digitalized.
Now, some analysts have painted a very colorful, very exciting banking future of banking. I've heard about self-serve cafes where customers go in. There is no actual banking apparatus or staff or whatever, but it's still banking. They go in there and it's just basically self-service. So I'm thinking, is that what you're talking about when you say it's really personalized, meaning there's no banking staff or maybe one or two around, but it's more of the customer themselves, just transacting and in a very relaxed, non-banking atmosphere, as it were.
Exactly. This is a part of it. The example that you gave, imagine yourself, you can go to one of these, let's call it digital branches or digital points, and you can practically do everything. when we talk about operations, you can pay your bills, you can top up your phone, you can transfer money, you can withdraw money, you can even have support at distance as it is all connected. Furthermore, these points and the technology is evolving to a point towards personalization where the bank itself, it knows you. You're not a number anymore. I mean, you're a representative of something. So the moment you initiate something in that point, maybe you'll be proactive towards you. If we think about it, in the traditional banking is reactive towards you, theoretically speaking, of course, but it's more reactive. Here, the speed of technology, the Internet of Things, all of it connected, all of the channels of the bank connected, all the information that exists on you, on your account is connected. So
they're all in the like a digital cloud
exactly.
as well.
So if you initiate something in this digital point, the bank may suggest, based on the experience that you have, previous experience, previous transaction experience, they may suggest to you to sell you a product, some advisement, whatever. So the communication between the end customer and the bank infrastructure becomes seamless, point-to-point, peer-to-peer.
Okay, so that physical versus digital, that line, that divide between digital and physical, is that already significantly thinning out?
Yeah, we can see.
Do we have to wait for the future for that?
We have to wait for the future, of course.
But it's not here yet.
It's becoming thinner. Of course, physical will not disappear as we need physical to interact with digital.
Because I remember I was speaking to you earlier and you said that we were talking about ATMs and cash, and you say that there's actually more cash in circulation. And I'm thinking to myself, that was the whole point of, because here in Nigeria, the central bank is pushing for the cashless campaign. They want people to use more cards and things to be more digital, money, transactions and all of that to be more digital, and for us to use less cash. But you're saying that cash is actually increasing, and that part of the divide still remains. But I'm thinking, wouldn't it be a very small, minute aspect or part of banking, at least in the banking future?
I mean, cash is going to stay, at least for the times to come, yes. And actually is increasing, which it's an interesting paradigm. What you're saying is that it's a very interesting paradigm of that line, of that thin line, because actually the usage of cash is increasing globally. Okay, you have some exceptions in the world, of course, that you can see a certain decline, but they are not representative of the total amount of cash circulating. Actually, the total amount of cash circulating is getting higher. Of course, we cannot see the future today, but the trend is definitely moving towards digital.
But these trends are giving us a sneak peek into what we can expect. And the issue of ATMs too. I mean, I'm also hearing that there's a possibility that ATMs could either become extinct or upgraded to some, I don't know what it's going to look like, but I'm thinking, is that also something that we should expect, the role of the ATM? How is that going to change?
The ATM is becoming more and more a sophisticated self-service product. It's not just something to dispense you cash. Let's theoretically put the hypothesis that cash is no more. So cash disappears today. The ATM will still be able to perform, of course, powered by the software behind it, but the ATM can still and will still remain as an automated teller. I mean, full teller. As I told you before, when you were giving the example of the digital point, we can transpoint this to what we're speaking now. The ATM can actually perform tons of operations in terms of multi-service.
More than what it's doing now.
I mean, the generic view of an ATM, for the common citizen, it dispenses cash. But today, an ATM is not just a cash dispenser anymore. Today, the ATM is becoming a full automated teller. Is already a full automated teller. Today, the banks have the possibility of enabling their machines, in this case that we're discussing, ATMs, to be able to perform the teller functions, the traditional human teller functions.
Okay, so going forward, all this, I mean, banks now embracing this, being more the whole digital space, using the use of data. I'm thinking, can banks, at what point would banks be able to begin to monetize this data?
I mean, banks are already monetizing on this, because every time
in such a way
transact,
that it's now become perhaps like a major revenue stream for banks.
in terms of
Making money from usual traditional sources, interest or non-interest income, especially here in Nigeria. I'm just thinking, because I was talking to an analyst a few days ago, and he said that is where he sees things going, banks beginning to monetize this data that they're using.
Of course. We can give you some tangible examples. If we move, if we continue the example of ATMs that we were discussing before, if we move the operations of a traditional teller and transform it into a digital service being provided by a machine, of course your transaction costs or your operating costs on these operations become less.
Okay.
So automatically you monetize. The example that we were discussing before, the proactivity from the banking institution towards you. If I have all the information regarding your account, your history, the way you transact, the way you perform, with all this data, as you said, you can monetize it, because then I have the ability to be proactive towards you and sell you new stuff. Okay. I can upsell, I can cross-sell, I can do whatever I want, playing with the channels that I want to.
Okay, so all that money saved is sort of money also gained, as it were. So so for Diebold Nixdorf, I know that you're also, I mean, you've dabbled into, or you're now into fintech, and I know that you're exploring cutting-edge technology in terms of software for banks and some other institutions. Tell us what your footprints are right now, especially in West Africa, what you're doing right now.
I mean, we are present all around the world, so we're present in over 130 countries. In Africa itself, we have present in all the African countries. If we reduce it to West Africa, we are present for quite a while. In Nigeria, for over 10 years, we are present. Okay. Present in Ghana, we're present in Sierra Leone, Liberia, and so on. We are now advising and following the trends, and to be able to deliver to the banking institutions the necessary tools for them to walk this path with us. Of course, if we take a step back and we discuss Africa specifically, and even Africa specifically, we need to split it into sub-regions, as you know, because we can see totally different realities from North Africa, Sub-Saharan to South Africa. Sure. But if we take a step back, we need to think a very important topic, which is financial inclusion. The different trends, geographically speaking, in terms of adoption of these new technologies, are quite different from one place to another in the world. In what it concerns to Africa, it's important to mention that one way of speeding up this change is no doubt financial inclusion.
Ricardo Dias Marques, Managing Director of West Africa's Diebold Nixdorf.